On that point of fees, I've got this graph here, which I think is pretty pertinent to what you're saying. Because when we start investing in ETFs and various index funds, we often don't think about fees. It'll say, 0.5%. We think, okay, whatever, 0.5% is fine. 1%, fine. Small numbers. But when you look at that graph, you see how that can impact your outcome over time.
Yeah. Fees compound. Any rate of return that compounds over long periods of time can be very impactful in dollar terms.
Yeah. And some people choose to keep their money in cash because most of us are never educated on this subject of inflation and what inflation means. So some of us, we might keep $10,000 under the bed. What do you say to those people?
Yeah, so inflation it's everywhere. It's been around for throughout history, and it's probably not going to go away. We have central bank policies in most developed countries that actually target a low but stable rate of inflation. And there are reasons for that, but what it means is that if you have money sitting under your mattress, its purchasing power will decrease over time. And that can be very damaging to your wealth. You can maybe keep pace with inflation using short-term government debt instruments, which are going to pay you a little bit of an interest rate. But again, periods of high inflation can cause even that to decline in real value. So one of the best ways to fight inflation for long-term investors, something we've been talking about, is just investing in low-cost index funds to avoid the fee issue and participate in the stock market, which throughout history has far outpaced inflation.